Tradeweb is in the spotlight today, seeing revenue climb 5.7% from last year and reporting record average daily volume, jumping 16.2% in the first quarter. Company also announced advanced discussions to expand with the acquisition of an Australian trading platform. Tradeweb CEO Billy Hult joins us now. Billy, great to have you here. First and foremost, you got to walk us through some of the volumes that you're seeing right now. What's driving that from your perspective?
Yeah, great to see you guys. Happy Thursday. Hope everyone's doing really well. Tradeweb's always played this kind of extremely strong leadership role, starting out way back when in the global government bond markets. That's been our lead horse market forever and ever, and it's been an unbelievably important moment to be such a strong electronic player in the overall macro markets in general. I started off the year as a new CEO. I've been at Tradeweb since 2000. I was an ex-bond trader picking up the phone and doing bond trades, and I was so enthusiastic about becoming CEO on January 1st. I was looking forward to like a normal kind of cadence of business, having everyone come back to the office and feeling like the markets were operating almost in a sort of regular, normal way. By the second week of March, we could kind of throw the term normal cadence kind of out the window with everything that happened with SVB and then the Credit Suisse UBS acquisition. One thing we've learned for sure is that there is such an interconnectedness around these marketplaces, but also an interconnectedness around sentiment. And in those days of March, with unprecedented moves in the Treasury market, unprecedented moves in the yield curve, our volumes were obviously clearly off the charts through the government bond market, through the interest rate swap market. Interestingly, and I was saying this today on my company's earnings call, there's no kind of like free lunch in my world. And from the moment after kind of the second or third week of March, interestingly, I think the markets have moved a little bit more, risk off. I think there was some pain in the marketplace as a result of those moves. But one of the things that I feel really strongly about is as we're hitting this sort of new equilibrium around a market environment, higher rates, I think a steeper yield curve and a little bit more clarity around Fed policy, I think this is an exceptionally important and interesting moment for fixed income. This is going to be a clear kind of move into fixed income.
And I want to talk about credit sort of as a subset of that, which I know is a relatively small proportion of your business. But, credit was kind of dead in the fourth quarter, right? And then we have seen this come back. But there's also a lot of concern about credit with the SVB collapse and other, issues in the system. What do you expect from here on out in that sector in particular in terms of a trading environment?
I think, credit's a really interesting, Martin. It's a huge marketplace. It's a hugely important market for us. You are right. It's a smaller market for us in comparison to some other of these very strong rates businesses that we have. I would say from my perspective, it's a top priority for the company to continue to electronify and digitize this space. Interestingly, I think, I was saying this again this morning, there's the real kind of true strong competitor for us in credit is still the phone. And these markets like high yield tend to still get done phone-based, phone-driven in the most volatile moments. From our perspective, that's an amazing opportunity. And we continue to build out really important trading protocols that help push the marketplace into a more electronic, digitized state. I think that's an important characteristic around getting these markets more transparent and ultimately more digitized. It's interesting. I think there's a correlation really between transparency and the health of a market.
Right.
And so we feel really strongly that we're going to continue to keep working on the credit market with all this room for continued growth there.
And then, Billy, just lastly, we only got about 30 seconds here, but when you think about monetization of the trends that we're seeing right now, where does that remain strong for the business? And just give us a snippet on this new tie-up as well, and this new deal.
It's, the monetization of it all is kind of there all the way through. I mean, I would say this. One really big focus for us has been ETFs, and that has been a driving, strong business for us. the growth of the ETF marketplace is kind of a one-way story, and we've played a leading role around ETFs now for a while. That's one highlight I would say for you. I want to say more, about this acquisition that we've made in Australia around Yield Broker, but we feel really good about it. We have a very, very strong culture at Tradeweb, so we're always making sure that when we do an acquisition, we feel like there's a cultural fit. This is a great company for us. It's going to continue to help us build out our presence internationally in the APAC region, and feeling really good about where we're moving with our international business. There's so much to play for at this moment in time around all of these kind of fixed income derivative markets globally, and it's good to operate and be from a position of strength as we continue to grow.
Billy, thanks for spending some time with us on a busy morning
Thanks.
for you. Billy Hult is Tradeweb CEO. Thank you.
Thanks, guys, for having me.